First things first, if you can read a nutrition label, then you're able to read basic financial statements. You can understand accounting principles and the use of capital. So what is accounting? Accounting is a system for providing financial information about a business or other type of organization. It's known as bookkeeping and includes the everyday task of documenting, classifying, analyzing, and interpreting the financial records of an enterprise or organization or business. This also includes auditing and figuring taxes. First, what is an audit? An audit is a process for testing the accuracy and completeness of information presented in an organization's financial statements. This testing process lets an independent certified public accountant issue what is referred to as an opinion on how fairly the agency's financial statements represent its financial position and whether they comply with generally accepted accounting principles, otherwise known as GAAP. Most public and many nonprofit organizations are generally required to follow the GAAPs, the Generally Accepted Accounting Principles. The Federal Accounting Standards Advisory Board helps promulgate federal accounting standards after considering the financial and budgetary information needs of citizens, congressional oversight groups, executive agencies, and the needs of other users. The Financial Accounting Standards Board provides private oversight and helps establish and improve standards of financial accounting and reporting for the guidance and education of the public, including users, auditors, and users of financial information. There are two basic types of accounting practices for non-for-profit and for-profit organizations. The use of cash basis and accrual basis accounting helps to record expenses and revenues. Generally, both for-profits and non-for-profits are required to record the purchase of long-lasting substantial property and equipment such as buildings, vehicles, and property. These are recorded as assets in the financial records, and you're allowed to depreciate those year after year. There are some exceptions that may include like museum collections, historical buildings, etc. Depreciation is figured as an expense or loss against the assets, the total worth of the organizations. It's recommended that you take a better look at accrual-based accounting and cash-basis accounting and see which one might work best for you. So a good first question to ask yourself is, why should you do accounting for your organization? And there are several reasons why. First, you want to meet the government requirements. It's essential. Second, to help people better understand the financial activities and the financial health and condition of your organization. Third, to ensure that financial resources are used effectively and efficiently. This is where it comes into play. This is going to help your bottom line. And fourth, to make sure you're not spending money you do not have. A great first step is to find an accountant. You can look up accountants for the public interest that may help you do this. There is also accounting software to help you carry out the accounting process. There are some assumptions you have to make with the accounting basics. The first one is the monetary unit assumption, which basically means the business should have one monetary unit to record its transactions. For example, the United States dollar. The entity unit assumption, as the name might assume, is that the business is separate and distinct from its owners. This means that the accounts and finances are totally separate from the finances and accounts from all the owners, and the business is treated as a person by itself. The time period assumption basically means that business profits or losses are measured on a timely basis. Every year, every 6 months, or maybe every 3 months. The going concern assumption basically means that there's no predefined period to terminate business. Basically, there's no ending date for the business life. Then you have the consistency assumption, which basically assumes that your accounting techniques are consistent throughout the entire business. The two methods of accounting are the cash basis and the accrual basis. The cash basis is where revenue is recorded when collected, expenses are recorded when paid, and it's pretty simple. Think of it like a checkbook. The accrual basis is a little bit different. Revenues are recorded when earned, expenses are recorded when encumbered, and this is usually a little bit more accurate. The cost principle basically means that any assets you have are reported at their cost. The full disclosure principle basically means Any events or circumstances that might influence the financial health of your organization must be disclosed. As listed, a good example of this may be lawsuits or investments.